Hi, my name is Ashleigh Pinto. I am a senior HR consultant in the HR consultancy team here at RSM, and today we will be covering the silly season and what to be aware of over the Christmas period. Unsurprisingly, the most common time of year that companies hold celebrations is at Christmas. There is often a reluctance from organisations to have any rules, policies or guidelines at this time of year, as there is the perception that it should just be a fun time of year. In a recent expert HR survey, they found that 66% of employers confirmed that they do not have any kind of policy setting out the standard of acceptable behaviour expected from employees at a Christmas celebration. However, 98.1% of companies confirmed that they were planning a workplace Christmas celebration. So for fear of ruining the upcoming festive spirit, I'm going to be talking about the implications of when a Christmas or seasonal event can go wrong and the steps to take to ensure that if you are faced with any difficult conversations or employment tribunals. So what are the implications if a seasonal or Christmas event goes wrong? Some of the most common instances referred to HR include verbal or physical altercations between employees, inappropriate behaviour or illness due to alcohol or drug use, and claims of sexual harassment. If a social event can genuinely be classed as an extension of employment, employers can find themselves being held vicariously liable for the acts of discrimination or acts of negligence committed by its employees at the event. Quite a nice quote came from one of our clients is, "Let your hair down, but not yourself." So who is liable and what does that actually mean? I personally have dealt with a claim of sexual harassment where drinks following a work event resulted in a director assuming that a female member of staff was making advances at him. This led to a difficult police investigation, some difficult conversations, and understandably a swift resignation. In this case, it did not go to an employment tribunal, but as you can probably imagine, the company were quickly without a senior member of staff to complete their client work, and communication was needed to reassure employees that the employer did not tolerate this type of action. However, there is some case law that also supports instances like this. In the case of Mohammed versus Morrison's back in March 2016, the court had to decide whether an employee who committed a violent assault on a customer was acting within the course of his employment, or whether the assault was so far outside the scope of what he was employed to do that the employer should not be held liable for it. The facts of this case were that the employee assaulted Mr. Mohammed in a petrol station forecourt following a verbal altercation in which the employee used racist and threatening language. Mr. Mohammed brought a claim against Morrison's. The court stated that Morrison's were not liable for the employee's actions. The Court of Appeal then agreed, stating that the case did not satisfy the close connection test, basically meaning that the employee's responsibilities were limited to interaction with customers within the kiosk, and in this case the attack took place in the garage forecourt, which was outside of his employment remit. However, when this case went to the Supreme Court, they disagreed, referring to the fact that where an employee misuses their position, it is therefore right that the employer that selected and appointed the employee should be held responsible. From the point of the verbal altercation in the kiosk through to the assault in the forecourt, this was an unbroken sequence of events, and in this case he could not metaphorically have taken off his uniform prior to the assault taking place. Therefore, he acted as Morrison's. This case supported a more recent employment tribunal, which was Bellman versus Northampton Recruitment, which was concluded in July this year. The events in this case was that a group of employees attended drinks after a Christmas party. Importantly, this after-party event was not organised and was after the work event. At this after-party, an argument broke out between Mr. Bellman and the MD. The argument was work-related, and Mr. Bellman questioned some of the decisions the MD had made. In response, the MD punched him, which caused brain damage. Initially, the court stated that Northampton Recruitment were not vicariously liable, but the Court of Appeal disagreed. Using the Morrison's case, they confirmed that the act was linked to Mr. Bellman's employment, due to the fact that he was the MD and obviously senior to the business, and he was discussing a work-related topic. Additionally, despite it being a social event, his seniority in the business did spill over into these social events. Therefore, he should have acted professionally. Crucially in this case, although it was an after party, it was following an organised work event in which the company had paid for drinks and taxis, and although the event was after the organised event, it was not an event that was solely held off the employee's own back. Therefore, the employer was liable. So what can you do to prevent these types of cases coming to your organisation? The key for employers is to take sufficient steps to minimise the risks of being held vicariously liable. In most instances, employers can no longer expect not to face the consequences of occurrences at office party of offensive jokes, fighting or other unacceptable behaviour. Employers need to be proactive to prevent these types of incidents from happening. One of the things that we recommend for organisations to do as a starting point is to have a policy in place. The policy is designed to remind employees that a Christmas celebration should be viewed as an extension of the workplace, that the same penalties for inappropriate behaviour apply, for example, a disciplinary. And it's important to set out the health and safety boundaries. So in this case, the duty to take reasonable care of your own health and safety at these types of events. And finally, set the boundaries for the following day. Any unauthorised absence on the day after a party should be treated as a disciplinary issue, and being hungover is not a good enough reason to be absent from work. I'm now going to hand over to my colleague Lee Knight, who's going to be discussing the tax implications at Christmas parties.
Thank you, Ashleigh. So I'm Lee Knight. I'm a tax director in RSM's Employer Solutions team. As Ashleigh mentioned, today I'm going to talk about the employment tax and national insurance aspects of Christmas parties. So the cost of a staff Christmas party or similar will not be a taxable benefit where the exemption at section 264 ITEPA 2003 applies. Where that exemption applies, the cost is also not liable to employers' Class 1A national insurance contributions. Now the exemption at section 264 ITEPA 2003 applies where certain conditions are met. All of the conditions have to be met, and those conditions are set out on this slide. The first is that the event is an annual party or similar annual function. The second is that the event is provided for an employer's employees. And the third is that the event is available for those employees generally, or available generally to those employees at a particular location. And lastly, the cost per head of the party or function does not exceed £150. So let's have a look at some of the words which were highlighted in bold on the previous slide. Firstly, annual. HMRC's understanding of the meaning of annual is that it is something that happens once a year and on a recurring basis. So, for example, a quarterly event wouldn't qualify for the exemption. Neither would, for example, a party to celebrate a business's 10-year anniversary, as such events are not annual. They don't happen once a year and they don't happen on a recurring basis. Available generally. Essentially, this means that all employees or all employees at a particular site must be given the opportunity to attend the party. If, for example, a business has a Christmas party for all employees and then a second Christmas party for directors and other senior employees, the second party wouldn't qualify for the exemption because it's only open to a small number of employees and not all employees can be invited. Thirdly, cost. This is the total VAT inclusive cost of the party or function plus the VAT inclusive cost of any transport and accommodation incidentally provided to the individuals attending it. So, for example, if you include, if you allow employees to stay in hotels and claim travel to a Christmas party, and as a business you then meet that cost, those costs need to be included in the total cost of the function, and it's the VAT inclusive cost that needs to be included there. Lastly, per head. When considering this, you actually look at actual attendees, not those who were invited. Now that includes all attendees, not just employees. So it might, for example, include employees' personal guests, such as their spouses, and business guests who attended the event as well. Where there are 2 or more annual parties or functions in a year, the exemption at section 264 can apply to 1 or more of those parties, provided that the cost per head of those parties or functions does not exceed £150 in aggregate. And, of course, the other conditions of the exemption at section 264, ITEPA 2003, are met in respect of each party or function. So, for example, if you have a summer party and a Christmas party in a year, all of the conditions for the exemption are met for each party, and each party, for example, cost £70 per head, including VAT. Both will qualify for the exemption in that tax year. If an employer's employees are organised into different departments at a single site, an annual party provided for each department can qualify, provided that a party is available generally to all employees at the site, and the other conditions of the exemption at section 264, ITEPA 2003, are met. So, for example, if you have lots of different departments at a single site, and each of those departments has their own Christmas party, and every employee at that site has access to a party, is invited to one, provided the other conditions are met, the parties should qualify for the exemption. Moving on now to Christmas gifts for employees. The cost of a Christmas gift to an employee will not be a taxable benefit where section 323A ITEPA 2003 applies. This is the exemption for trivial benefits in kind. Where section 323A ITEPA 2003 applies, the cost is also not liable to employers class 1A NIC. Section 323A ITEPA 2003 applies where all of the following conditions are met. Firstly, the gift costs £50, including VAT, or less to provide. Secondly, the gift is not cash or a cash voucher. Thirdly, the gift is not a reward for an employee's work or performance. And lastly, the gift is not in the terms of the employee's contract. So what should you do as an employer if the exemptions for Christmas parties and Christmas gifts do not apply? Well, there will normally then be some chargeable staff entertainment or chargeable staff gift benefits to report to HMRC. The first point to think about as an employer is, do you want employees to pay the tax due on these types of benefits? Most of my clients and the employers that I deal with on a regular basis wouldn't want their employees to pay tax on these benefits. Secondly, employees' NIC may also be due. For example, if the gift is a non-cash voucher. As with point 1, do you want employees to pay this employee's NIC liability as well? Thirdly, employers' NIC will also be due. So the question that most employers will need to ask themselves is, do they have a pay-as-you-earn settlement agreement which covers these benefits, and do they want to use it rather, for example, than putting these benefits and reporting these benefits on the employee's P11D, or, where required, via the payroll? A pay-as-you-earn settlement agreement is an agreement with HMRC whereby an employer agrees to pay the tax and NIC due on a benefit where it qualifies on a grossed up basis, and the employee's tax position is left undisturbed. Crucial point is the final point. The employer should consider these additional costs of tax and NIC when they are planning and budgeting for such events. Thank you.